how little news we generate compared to how many touch points we have. And this goes to the foundation principles of the group and its founders. We internally have a concept which we call differentiated and many P&Ls. So one P&L which you see, which I went through, we have another P&L, and P&L of how other stakeholders look at us. Whether we make a difference if we have a business in Goda. What were Goda's economic indicators when we went there, and what are Goda's economic indicators today, now that we are there? Do people know about Santhals today more than what they knew when we went to Goda? And so on and so forth. So these are embedded decisions, not just box ticking exercise for us. And it's reflected in the fact that the core committees of our boards, which is for the purposes of ESG, which is corporate responsibility and risk management, they are a corporate responsibility committee, which is 100% independent. On the other side, on the P&L, on the numbers P&L side also, we are one of the only few corporates in India, where the audit committee also is 100% independent. We do not sit on our own audit committee, although SEBI allows you to, because in listing requirements, audit committee has to be only 75% independent. And so one person can be us. We do not sit on our audit committee of any of our corporates. Every single one of our audit committee is 100% independent. Every single one of our corporate responsibility committee is 100% independent. And the reason is that they must be independent. We cannot sit on audit on ourselves, even though permitted by law in the country. So with this background, the really important part, so I hand over to Hanijala. Thank you.
Thank you, Rob. Thank you, Robbie. And I think now let's come to the main part in terms of the NCD issue that we're having this conglomerate go out for the first time in the debt IPO space. To run you through the issue details, it's a secure, rated, listed, non-convertible debenture issue. It's a base issue of 400 crores with an oversubscription of about 400, aggregating to a total of 800 crores. It is broken up into 3 tenors, which is 24 months, 36 months, and 60 months. The coupon payments options are available to the investor, which is on a quarterly, annual, and cumulative basis, which is segregated into separate strips, which we'll run you through later. There is a security cover of 1.1x of principal and interest amount total. It is rated CARE A+ with a positive outlook, which I think Robbie's spoken about. The NCDs will be listed, and this will be on BSE and NSE. BSE has been appointed as the designated stock exchange depositories. The depositories are NSDL and CDSL. The taxation is subject to the investor, whoever is holding. The use of proceeds is for general corporate purpose and prepayment or repayment of debt in part or full. The issue opens on September 4th and closes on September 17th. As I mentioned, there are about 8 series that we are offering, which is across 3 tenors, which is 24 months, 36 months, and 60 months. As you can notice, we have in 24 months, 2 options, which is annual and cumulative. And in 36 months, there are 3 options, which is quarterly, annual, and cumulative. And in 60 months, you have the same series, which is quarterly, annual, and cumulative. The interest rates range from about 9.25% for a 24 months, 9.65 for a 36 months, and 9.9 for a 60 months. This is what I've spoken to you on the annualized levels. The redemption amount on maturity for NCD holders is the minimum amount that we have given here, and the maturity is on the dates of the redemption. There is no put call option, so you hold till maturity. The face value or the issue price of the NCDs is 1,000 rupees. This is in minimal, the minimum application amount is 10,000 rupees and in multiples thereof. This is defined as a secured instrument. There are 4 categories of investors who can participate in a debt IPO. The category 1 are institutional investors, as we call as qualified institutional investors. These will mainly be your large financial institutions, banks, provident funds, insurance, pension, and the like. Category 2 are non-institutional investors. These are companies which are defined mainly corporates, which could be statutory bodies, cooperative banks, and many of the others. Category 3 are the main sort of segment as we call as retail, which is category 3 and category 4. Any investment which is beyond 10 lakh rupees is classified under HNI category, and below that is under the retail institutional category. In the retail institution also, there is a limitation to the minimum, the maximum amount that one single retail investor can apply. This is a broad breakup of the debt IPO allocation. So the institutional investors' participation allocation is about 10%. The non-institutional investors, which is category 2, is 30%. The HNI category is 30%, and the retail investor category is 30%, which gives you a perspective that the debt IPO is allocated more for a public issuance of retail participation. The intermediaries to the issue are trust investment advisors. You have AK Capital Services and Nuvama Wealth Management. The registrar is Lincoln Time, and the debenture trustee is Catalyst. So we'll now open it up for questions that you may have.
We would request to identify the name and the media house you are representing.
So, very good morning. I am Siddharth Bhatt from Alparam Hindi Daily newspaper since 1982. मेरा प्रश्न है रोबी सिंह साहब से कि वाई डिबेंचर, अगर हम इन्वेस्टर को या इंडियन पब्लिक को बेनिफिट देना चाहते हैं, यू मे ऑल्सो कम अप विद द पब्लिक इश्यू ऑफ इक्विटीज, और ये एज अ बिजनेस पर्सपेक्टिव by issuing debenture during this tenure, it may be a costlier affair comparatively. So why we have not gone for other mode of raising fund? Thank you.
As I explained, in the in overall capital management space, 2 things become important. One is that what is the overall end objective, and you have the responsibility. One of the core responsibilities is that across the product set within the Indian capital markets, public debt outside of government and financial institutions is very limited. And if you look at any mature developed market in the world, that is not the case. So as a large corporate, it becomes incumbent on us to play a level of developmental role. So that's to answer the cost. So we understand there is some cost to it. But in the longer term, that cost gets mitigated because it creates a new access to a type of capital that today is not there. So the one is the longer term plan. The second is from time to time, we continue to, it is outside the purview of this, but we are one of the few large corporates that have very active domestic engagement program where we go and meet in various cities in India, showcase our companies. So from an equity investor perspective, that continues. And as we go along this, you will see that this journey, that you will see that the entire product set across the capital spectrum will become available for retail as well, including equities. Thank you. Next question.
I'm Rafat Kadri. I'm editor of Bilkul Online, an English business and lifestyle portal. I have 2 questions. since you allowed free speech and you're open to questions, I'm not asking any serious question, just making it light. How is the Josh? My first question is. Secondly, how many employees does Adani have?
Answer the second question first. We categorize our employee ecosystem in three ways. So direct employment, roughly about 42, 43, because I has to not give you the exact number because about 1 or 2% is normal changeover that occurs. So about 42,000. We have contract and direct contract staff of similar amount. And our Adani India Infra Limited has a further contract workforce which works of about 1 lakh, which works on our development projects. So in total, at any given time within our construction program, our contract workforce and employee workforce roughly about 1.8 lakh crore. 1.8 lakh, sorry, numbers. In relation to the first part, I get into trouble. It was last year, yeah. So the Indian flag was behind me, and a lot of people, excited people, commented on that. Those of you who don't know, I represented India, so I've had Indian flag in my office or my house since 1986. I've been Indian athletics, so I had the right to use the flag, but nevertheless, it's about the fundamental nature of what we do. Is a pure domestic investment, largely group and portfolio. We find ourselves in times that is the time of India. India will add an economy the size of US to its economy in the next 25 years. What took US 200 years to build, we will do that in 25 years. Okay. So you can imagine what exists in the US today. We'll build all of that in 25 years. So one of two things will happen. Either the future generation will look at us and say that when opportunity came, we had the courage to look in the eye and work hard and deliver. Or we were part of the same generation that brought India to its knees in 1990. I'm of the opinion that this generation of India will not let India come to its knees like it did in 1990.
We have few online questions. Am I audible? Yeah. Yeah. So the first question is from Divya Patil from Bloomberg. Where do you expect the demand coming for the public bond issue? That's because institutional investors like insurance can't invest in corporate bonds rated below AA, while mutual funds may choose the company's equity as returns may turn out to be much higher. What factors will pull or draw the HNI and retail investors to invest in the issue?
Can I address that?
Sure.
Yeah.
So Hani can address.
I think as lead managers, let us give you a perspective. I think the Indian debt markets is growing dramatically, and a lot of retail and HNI customers participate in debt today from an allocation of investments that they make. And today, companies like Adani Enterprises and the others that we are seeing are good investment avenues and opportunities for retail investors to get a return, which is a fixed return on an ongoing basis. So you will see the reason why a debt IPO is being done and the allocation that we have done on this issue is also 90% for retail, HNI, and corporate, and 10% for institutional. So you're absolutely right that the issue is targeted towards corporates, HNIs and retail category. We do expect a fair bit of interest in these three areas than as compared to an institutional segment. I hope that
Nothing to
addresses.
add. Yeah, that-
The next question is from Dilip Davda, contributing editor chittorgarh.com. What will be your take on such issuances going forward? Considering the size of operations of the company, will this fundraising suffice your needs? And will your group companies follow the trends going forward?
I think as a policy perspective, we don't do anything in an episodic manner because we certainly find ourselves that we need capital. Okay, that would be complete dereliction of duty. Overall, it's a part of a capital management planning, and as part of that planning, a small starting step is being made to develop a market that is not fully developed in the country, and we believe that it is market that we should develop, and that is being driven from that point of view. It does not alter or materially change the structure of our capital management planning, this specific issue size. Overall development of domestic capital market is an important ingredient for us over the next 10 to 20 years. So we want to make sure that it develops properly over that period.
Thank you. So we have a couple of more questions. The next is from Dharam Dhutia of Reuters. Will we see other Adani group companies tap local bond market in coming months? Would it be private placement or public issue? Any plans for tapping dollar bond market? So a part of that you have already addressed.
I mean, I as not as AEL CFO, as group CFO, I know, but that's not at liberty to disclose in this conference.
Sure. And one question from Krishna Merchant. Okay, so it's more or less same, sir. Whether it will be from the other group companies, such issuances.
Krishna also knows, so because I know Krishna, so the same answer there, that we not in this conference that we can talk about this.
Any more questions from the audience sitting here? Yeah. You can identify yourself. Yeah.
Yeah, good morning. My name is Sunil Raghu. I work with Informist Media. A couple of questions. Say 2-3 years ago, when we had a conversation, the focus of the group was to switch domestic debt to foreign debt because it was cheaper. So has something changed? Are we going to tap more of domestic market now? And second thing is, we were talking about bringing out series of IPOs. Remember, for airports, roads. Will those come, or would we stick to just raising the debt now?
I think to an answer to your first question, I think maybe we should clarify. There is no see, the capital is not set up because there is something available for 7% and something available for 7.5, so you go 7. Capital structure of a business is set up on the nature of the gaps. So part of it will be global long-term capital, part of it will be domestic short-term capital, part of it will be bank debt, part of it will be long bank debt. So there's no, it is a fallacy to assume that the decision to design the capital structure comes from the sticker rate 9%, 9, or whatever the number is. The risk-adjusted cost of capital is driven by the underlying duration, underlying refinance, underlying system risks that we carry. Our objective as leaders within the organization, or my objective as functional head also for Adani Group, is to ensure that we have minimal system or liquidity risks. Okay, because whatever, anything that can occur will occur over a long period of time within certain probability. So you do not go for quote unquote cheap short-term paper and leave yourself open to duration, refinance, and system risk. Okay, so that's the one. So it's not, we don't set those numbers. The numbers drive from this underlying stage where the businesses are. Your second question in relation to, yeah, so as we had always highlighted, 3 de minimis conditions must be met, and those are: a individual business must be able to support itself fully. It has the organizational capability to conduct the business fully from both board, management level, so it is at organization certain stage. And third, that its ability to consistently be able to invest at a rate that we desire for that business to grow. So once these 3 things are met, then the business will be we believe that for us within AEL, the first business, as we highlighted last year and highlighted at an annual results meet, airports will be the first business that will be ready for demerger, and we retain the timing as consistent 27, 28. Thank you.
Yeah, Abhinay. So we'll take only one question offline, and there are 2 more online questions, and then we'll close. We are running short of time.
Hi, I'm Nehal from Mint. Mr. Singh, you mentioned that domestic debt capital markets will become important as part of your debt matrix 10 years down the line. If you can just give some sense, how significant you see this portion to your overall debt matrix 10 years down the line.
See, again, the idea is not the particular instrument class. Why we need the domestic debt capital to develop is an overarching structure that as a nation, we must fully monetize our financial assets. So today, majority of our financial assets are not monetized, meaning they are sitting in non-monetized form. They are sitting in financial assets, but they are non-monetized, which is either gold at home or land that has no mortgage or house that has no mortgage. So there's financial assets not being created fully. So the objective is provide the best platform to those who have financial assets to be able to monetize their financial assets. And the reason why this becomes important is that India roughly has about 2 to 3 times its GDP in its financial assets. So therefore, there's a large capital that can be monetized, provided the access, transparency, disclosure, and comfort exists for the public to invest. So the objective is the monetization structure. So today the monetization option is you put a deposit at the bank, or you buy a government security, or you buy a financial institution security. Aside from that, there's no fixed interest option. So, or you have a mutual fund fixed interest that you are exposed to fluctuation risk of the fund itself. So this is a new way to say that you can have direct exposure, a direct disintermediated exposure into a fixed interest product. And that should access some of that financial capital, which we can then deploy to our own infrastructure development. So from a size perspective of a decent, fully functioning economy, to give you an example, the global equity markets around 80 trillion, and global fixed interest market is around 130 trillion. So the fixed interest market in India will broadly follow that trend as well.
Thank you.
Sir,
Earlier you.
Sir, mic.
Yogesh Shah from BCHIP. Earlier you draft paper for 600 crore and now it is 800 crore.
Sorry, I didn't understand the question.
Earlier you, your draft papers have sent to for 600 crore. It is postponed and now it is 800 crore. What is reason?
Yeah, so as lead managers, we'll just address this. The initial draft was, yes, filed at 600, but we felt that it was important to look at a larger size. And that's why we had changed it to about 400 plus a 400 to 800.
So two last questions, if you can take it online. One is a common question from a couple of media which are online. Considering that Adani Enterprises has board approval for QIP issue, can we expect one soon? When is it expected? And how much the company is planning to raise via QIP?
Patience is the virtue, no?
Okay, so, and the last question we will take for today. Is there any conscious change in diversifying debt while pursuing ambitious expansion plan by the conglomerate? That is from PR Sanjay of Bloomberg.
No, there is a specific desire to diversify the sources of capital, but that is not a byproduct expansion. It's byproduct expansion, the investment decision. So this is a funding decision of that investment. So both are not the same. So investment decision is related to, as I said in my opening comments, the two core areas where Indian economic structure and where we find ourselves in the policy architecture now in the country on energy and logistics is an economic benefit that will accrue, and therefore our returns will come from that economic benefit. So it's very likely that those returns will occur and over a long period of time. So investment decisions related to that. Now, how we fund that investment, that is, each company will have its own plan. This is AEL's plan. Our other companies will have their own published capital management planning, and according to that plan, they will also continue to diversify their funding sources. Thank you.
Thank you very much, sir. Now let me invite Mr. Brajesh Jaisalmeria to give the closing remarks.
So, hello everyone. I think we had a great session. We had a great insight from Robbie for the company side, and Hani gave a great insight on the issue structure and coupon side. So, on behalf of management, lead managers, we thank you all. And to just summarize the issue and the company details, I would just highlight few things more. Adani Enterprise Limited is part of Adani Group, which is among India's top business house. It is one of the largest incubator for the new businesses in terms of energy and utility transport. Over the years, the company has incubated sizable and scalable business and successfully listed them. So I think few questions were there regarding this, including by the way of demergers and Adani Port and Special Economic Zone, Adani Power, Adani Green, etc. To summarize on the issue side, this is the maiden issue of Adani Enterprise issue, Adani Enterprise Limited. First issue, 400 plus 400 is the size. 3 categories, 3 series with 8 categories over there. 24 months, 36 months, and 60 months, with coupon ranging from 9 quarter to 990 YTM levels. The issue is opening on 4th and closing on 17th. The issue would be made on first come first basis with other options. So thank you everyone, and have a great time. Thank you.